Good morning, everyone, and welcome to another edition of the Vetiva Breakfast Meeting, where we go over the local and international capital markets with in-depth analysis and unique insights. This meeting is brought to you by Vetiva Capital Management in partnership with Frontier Africa Reports. Today, Tuesday, the 29th of June, on our agenda, we have a rundown of the local and international equity and fixed income markets, the BRVM, and some insights from our partners at Frontier Africa Report. Before we hear from our speakers, I'd like to remind everyone that this meeting is being recorded and may be shared with third parties. The presentation is scheduled to hold for 30 minutes. That is inclusive of Q&A, which will happen at the end when all of our speakers have made their presentation. If we are unable to answer all of your questions due to time constraints, do feel free to forward them to us at research@vetiva.com, and we'll get back to you as quickly as possible. Today, we'll start with a rundown of the local and international stock market from our global equities desk, brought to you by Seun, our equity dealer. Good morning, Seun.
Good morning, Joshua, and good morning, everyone listening. So we'll start off in Ghana on the review of the performance of some markets in West Africa, where the composite index closed flat, as the index recorded no change in yesterday's session. It was a generally quiet outing for the market, and activity level though improved 28% in terms of turnover. That's for the Ghanaian market. The market looks to be taking a cue from last week with a quiet start, even as EcoBank and MTN Ghana were the top traded names in that market. Yet today return for the Ghanaian index remained decent at 36.16%. So we believe going into today and also for the rest of the week, we anticipate market to remain mixed as we tip the likes of EcoBank and Cowbank to lose some ground in the session on the back of some selling pressure. We also believe we expect investors to cherry pick names such as Fan Milk and Enterprise Group. A quick look at the performance of both of those names, that's Fan Milk and Enterprise Group, shows that Fan Milk and Enterprise have gained over 24% year to date. So we believe these are decent names to also for investors that are looking at some sort of investment in the market. These two names are some of the names that we also like, Fan Milk and Enterprise Group. So back in Nigeria and just like in Ghana, we saw the index closed flat and unchanged as well. We saw gains and losses across sectors, with the industrial closing higher, while the banking sector closed marginally lower, and which is on the back of losses that we saw in both Zenith and FBN. NSE Oil and Gas was the major price decline that we saw in corn oil. I think we had mentioned yesterday our expectation that the substantial interest in Zenith and GT holding should persist. However, this didn't play out as expected, but what we saw was that the market was largely dominated mainly by large trades in two of the high-cap names, as specifically MTN and Ghana. And they accounted for about 61% of the total turnover in yesterday's session. Quite a significant chunk there. Trades in MTN was mainly local, as like we gathered, while Nestle trade was largely foreign, was done by foreign investors. Also, market was quite busy across sectors as investors continue to cherry pick names, though they are doing this cautiously. So I will believe we will continue to see that play out in the market. Market breadth for the session returned marginally lower, as we saw 13 gainers and just 15 decliners. This is just to buttress the mixed outcome that we saw in yesterday's session. So finally, going into our outlook for today in the Nigerian equities market, we have noticed steady demand on the banks as investors continue to favor that sector, specifically the tier one banks. Actually, this trend should persist in today's session. That's what we expect. We should see more large crosses in the session as well. Aside that, market will continue to trade range bound in terms of both volumes and turnover. So names that we believe we like Zenith, Dangote Sugar. We also like Flour Mill and MTN for trading purpose for mid to long term investors. That'll be it for the global equities market. Thank you very much.
Thank you very much, Joe. Next, we'll hear from our fixed income trader on the fixed income and currency market. Good morning, Omar again.
Good morning. Good morning, everybody. I'll be taking the market update for the Nigerian fixed income market. For yesterday, I'll start with the money market. The money market is still very liquid. Opening figures for yesterday was about 44.89 billion positive. This was a significant decline from Friday's liquidity figures of about 110.22 billion positive. So despite the decline in system liquidity yesterday, interbank rate losing by over 350 basis points to trade around 18.5% levels from the 22% levels that were recorded on Friday. The ease in rates, despite the drop in system liquidity, was largely due to the reduced funding pressure yesterday, as there was really no significant funding need in the market. So our expectation for today is that the money market will trade at similar levels, barring any major shock to the system. Moving on to the FS market, the parallel market lost about 2 naira yesterday to trade at 502 naira to $1, while the earning window traded at a high of 420.90 naira to $1, closing at 411.28 naira to $1. That is a 39 kobo appreciation from where it closed on Friday, while the earning industry turnover decreased slightly by 12.3% to close at $100.48 million yesterday from the $114.53 million that was recorded on Friday. We believe that the Naira will continue to hover around these levels, barring any significant inflow of FX into the system. Moving on to the T-bills market, the T-bills market opened the week to a tepid trading session with slight bullish sentiment seen across the benchmark curve. Overall, average benchmark rate declined by about 30 basis points to settle around 6.58%. We witnessed interest on the long end of the benchmark curve, particularly on the May 26, 2022 paper, with trades consummated on the special NTB and also on the 9th June 2022 NTB. In the OMO segment, there was a slight uptick in market activities with a slight bearish bias, but few trades were consummated across the benchmark curve because of the limited supply of funds in the system. Trades consummated on that end were majorly on the short and long end of the benchmark curve, especially on the September 2021 and the May 2022 papers. Overall, average benchmark rate rose by about 12 basis points to close at 9.44%. Our expectation for today is that the T-bills market will trade on a relatively quiet note as market participants gear up for the NTB auction that is happening tomorrow. I'll move on to the bonds market. The FGM bonds market opened this week on a very bullish note as market participants engaged in half-year trading activities. We observed some interest on maturities across the benchmark curve, particularly on the 2024, 2037, and the 2049 papers, while trades consummated yesterday were majorly on the 2027, 2035, and the 2050. Those are the bond auction maturities. Offers on the 2027, 2035, and the 2050 declined to settle around 12.2%, 13.1%, and 13.15% respectively. Overall, average benchmark rate declined by about 9 basis points to close at 12.75%. Our expectation for today is that the bonds market will trade on a bullish note as market participants continue to trade sentiment around July inflows. That will be all for fixed income. Thank you very much.
Thank you, Omorige. Next, we'll hear from Sheikh Mbu on the BRVM market. Good morning, Sheikh.
Hello, good morning. So the BRVM on this 25th week of trading reached some new record in terms of performance and showed its third consecutive weekly positive trade. So the BRVM composite now went beyond the 160-point bar and now reached 161.58 points. So the BRVM kept showing its upward trend thanks to all the progression that was recorded by the BRVM composite. So the other industries that were very solicited and targeted by the investors were the BRVM industry, which appreciated by 3.44%, the distribution industry, and as well as the agriculture industry. The last week only, the total amount of transaction, the total volume of transaction was amounted up to 1.3 billion CFA. In terms of individual equities, once again, Nouvelle Edition Ivoirienne is the one at the top, showing a performance of 22.06%. So the stock price kept growing since the publication of its annual results by the company. So since the beginning of the year, the stock price almost doubled and appreciated itself by 80.43%. It is considered to this date the 12th best stock in the market. In terms of the market loser, you have Alios Finance. Alios Finance, which share price showed a downtrend. The finance company basically recorded a loss of 1.66 billion in 2020, mainly due to a 4.5% drop in the net banking income and a sharp rise in its cost of risk. In other news, several companies last week distributed dividends. In this case, you have Cetao Ivory Coast providing a net dividend per share of 66 CFA. You have BC Ivory Coast for net dividend per share of 50 CFA. Société Générale 250 CFA. FGB 368 CFA. And Chorus Burkina Faso 406 CFA per share. The bond market went down slightly, with the market cap dropping by 0.31% compared to last week's capitalization market cap. The weekly value traded stood at 9.47 billion CFA against 2.07 billion CFA last week, still marked by transaction carried out on bonds issued by the Public Treasury of Ivory Coast. In the fixed income market, it was mainly Ivory Coast and Burkina Faso that intervened on the money market for debt raising amount of 105 billion. The investors proposed a total amount of 208 billion, in this case, a coverage rate of 198%. The issuers only finally, in this case, withheld 114 billion compared to the original amount. The most popular issue of the week was the Treasury bill of Burkina Faso, with a coverage rate of 133%. In this coming week, in this current week, it is expected to see an issuance of the treasury bills from Ivory Coast, totaling 60 billion today. And in tomorrow, we're expecting to see the treasury bonds from Mali for a total amount of 25 billion. That's it for the update on the BRVM.
Thank you very much, Sheikh. Next, we'll hear from our partners at Frontier Africa Reports. Today we have Temple joining us. Good morning, Temple.
Good morning, and thank you for joining us again. So recently, the UNCTAD did release a report titled World Investment Reports, and it shows that FDI, that's foreign direct investments to Africa, declined by $7 billion to $40 billion in 2020. The reason is not far-fetched. We all know it's due to COVID-19, but quickly, the highlights of that report is that commodity-dependent countries like Nigeria and the rest basically were severely affected than non-resource-based economies. And of course, greenfield projects announcements fell by 62% from $77 billion to $29 billion. Cross-border mergers and acquisitions also declined from $5.8 billion to $3.2 billion. You have international projects finance announcements, especially in the area of heavyweight infrastructure projects, declining as well by some 74%. Basically, those are some of the highlights in that report. When you look at the report from with the continental picture, from the continental perspective, because there are also breakdown as to countries. So that's that about that. Kenya has, we told you some times ago that Kenya is looking to also come up with a capital market master plan. Now they have appointed a committee to manage that initiative, and the committee is basically to facilitate the master plans alignment with Nairobi International Financial Center's blueprints, basically a strategy that they have also come up with, basically to align the capital markets with the financial market status. South Africa's consumer confidence also fell for the second quarter of this year. The consumer confidence fell by 13 points. Compared to, or fell from 13 points to 9 points, I beg your pardon, from 13 points to 9 points. That's in the second quarter of this year. The decline is due to government's discontinuation of the social welfare payments and disposal of temporary relief to workers that have been affected by COVID-19 and have become unemployed. That is basically affecting that economy right now. To make matters worse, the rand also fell yesterday significantly, weakened more as it also affects the Johannesburg Stock Exchange key sectors. We know that the rand to dollar is now 14.22, and of course that's some 0.6% decline, 0.6% decline as well for rand to euro, which is now at 16.9 per rand to per euro. In terms of pounds, it's around it's between 19 and 20 rand per pound, and that was a decline of 0.87%. We understand that yesterday at the markets, the entertainment or leisure-focused stocks and retailers, as well as banks, led losses at the Johannesburg Stock Exchange. Mainly the JSA Financials crumbled by 2.26% or thereabouts. And finally, MasterCard did release the SME Confidence Index for 2021 on Middle East Africa SMEs specifically, and it did show that quite a number of the SMEs are really optimistic about their business in the continent. There's 73% of SMEs are actually optimistic, and they remain guided by potentials for access to training and better data as well as digital payments. These are some of the headlines we've got to share with you this morning. Thank you for listening.
Thank you very much, Temple. We have now heard from all of our speakers, and we can take questions. So if you have any questions and you would like to speak, you can kindly raise your hand and you'll be allowed to speak. Or if you prefer, you can leave a comment in the Q&A chat box and we will answer all of your questions. If you are joining us from Facebook, you can also leave a comment there and we will answer your question. All right, it appears we have no questions today, which means we have reached the end of today's meeting. We thank you very much for joining us. We hope that you will join us again tomorrow. We urge you to continue to stay safe and to enjoy the rest of your day. Good morning.